Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Friday, May the 28th, 2010. Well, a red body candle today, and we no longer have a continuation of the higher highs and higher lows that the market has made over the last 2 days. The previous day's candle was a very large green bodied candle with the market opening at the low and closing at the high. This is the most bullish type of candle that we could have. And what happens quite often after a very extremely bullish day like this is that the market needs to take a break, and that's exactly what's happened here. We have a red body candle, moderately sized body, and it's telling us that the sellers have made net bearish progress on the day. The buyers have failed to make any more continued bullish progress, so the sellers have made net bearish progress. Excuse me. Also, the fact that the market has failed to take out the high of the previous candle does raise some fear about the continuation of this trend to the upside. If the bulls were continuing with their commitment to taking this market higher with continued higher highs and higher lows, that high would have been taken out, and they failed to do so. Now, this is a potential reversal pattern, although there isn't really much of a substantial trend to reverse, but it is a harami potential reversal pattern, almost a tweezer's top as well. So we should be watching the low of the current candle for a potential lower high and lower low. Now, just down below here, however, is this 1080 area, which may offer itself as support for the market if the market does come off. There is also very strong support all the way down through here to 1041. So if the market does trade down below this region here, then there is potential for support to come in. And we saw that from these long shadows where the buyers have come in previously. To the upside, though, there is also potential resistance and a fair bit. And we have resistance offered at 1106 to 1100, roughly the zone that the market's closed in. And certainly up to the Kijun-sen and up into the cloud. So a lot of resistance overhead. Now, the market is still trading down below the cloud, so it has an overall negative bias. Trading below the Kijun-sen, so a negative bias there. But now trading up above the Tenkan-sen, which means that in the short term, it closed down below the Tenkan-sen again. The previous day, the market closed up above, and now it's closed down below, which means that it's negative in the short-term time frame as well. So negative in all time frames. So there is potential for this market to come off, and for this swing high here to be an intermediate swing high in the second time frame downtrend. So with the market making peaks and troughs, here we have a peak, a trough, a lower peak, a lower trough, lower peak, lower trough again, and this could be potentially a lower trough and the market sell off and take out, a lower peak and the market take out this trough. Interestingly, the Kijun-sen has turned flat, and when that Kijun-sen turns flat, it tends to be an attractor of price action, and that's certainly what's happened here over the previous 3 days. The market has been attracted back towards there, but obviously we need to be aware of the areas of potential resistance on the way up in the market, with the market trading up to that area. So there is potential for this market to come off now. So we do need to watch some important areas for this market. Certainly this area just above 1106 is important for any bullish close there for the market to trade back towards the Kijun-sen and the bottom of the cloud, but certainly the low of the current candle for the market to sell off and trade to within this area of support.